industry experts from powerhouse brands. Earned Summit, Building a Community by Tribe Dynamics.
Hi, everyone. We're going to give a couple minutes here just to let people filter in. Probably wait about 30 seconds or so, and then we'll get things started.
Is it okay to be on mute, or would you recommend not using the mute button during this?
I recommend not.
Okay. There are hazards. I'm sure we all know them.
It's where we are now.
All right, we can take that cue actually just to get started here. Thank you guys so much for tuning in today. I am incredibly excited to be moderating this panel of leaders in the finance industry. I'll turn it over quickly to them because they can give us a wealth of knowledge, not only on the M&A and investment landscape today within beauty, retail, and consumer sectors, but also they spend their days talking to businesses and helping to identify and support businesses of all sizes to success. And I think that there is a lot that we can learn from that. Again, both as investors, as operators, as advisors. So we'll spend the next 45 minutes or so picking the brains of these three industry leaders. We have Blythe Jack, who is a managing director at TSG. We have Shaun Westfall, managing director at Jefferies Investment Banking. And we have John Bailey, who is a managing partner at Knox. So incredibly excited to get your insights and thoughts over the next 45 minutes and really appreciate you taking the time to join us today. We'll start it off. How about Shaun, you want to kick us off just with a quick introduction, who you are, what you do, and how you got there?
Yes, thank you, Brit. And it's a pleasure to be on with all of you, and thank you for joining, and thank you, Tribe, for inviting me to join. It's an honor and a pleasure. I've got a long history with Tribe, and I think many of you that might be tuned in. But as Brit said, I head up our investment banking efforts at Jefferies. I've got a decade-long plus career advising clients in the industry, and have had the great privilege of working with some of the sector's most disrupted brands as they found private equity partners, strategic partners, and really look forward to the conference and the chance to actually put on a colored shirt today. Blythe, you want to go?
Sure. I chose this background to, if nothing else, brighten up your day if you're bored. So I'm Blythe Jack. I'm a partner at TSG Consumer Partners. I've been there about 9 years, but have been in consumer private equity for 20. Some of the deals I've led include IT Cosmetics, Clarisonic, and then I do a lot of personal investing in up and coming emerging brands that are a little bit too small for our group, like Thrive Cosmetics and Aqua's Hair Care and Supergroup and some others. Love so much the consumer market, and in particular beauty. It's so conducive to entrepreneurship and innovation and value creation, which is what my job is. So thanks so much for having me here today. Tribe is a major leader in helping us all understand the trends of our market. So I can't think of a better discussion to have than now.
Hear, hear. And thanks, Brit, to you and the Tribe team for including all of us today. Looking forward to the discussion. My name's John Bailey. As Brit said, I'm the founder of Knox, which is a recently launched consumer private equity firm based out of San Francisco. I will say some interesting times to be launching a new firm. So shout out to all the founders on the phone who are navigating through the crisis. My background has been largely in consumer investing. Most recently was a partner at TPG, which is a large global private equity firm. And then prior to that, worked with a firm called North Castle Partners, who was one of the original investors in the health and wellness space. I also spent some time on the operational side. So most recently was both president as well as CFO of Elf Beauty. and spent about 4 years there helping to lead the evolution of that business and that brand, and ultimately took it public on the New York Stock Exchange. And at Knox Lane, I would say our focus is pretty broad-based within consumer and across stage. I will say relevant to this audience, some spaces where we've spent a lot of time include beauty, wellness, nutrition in particular, with names like Elf Beauty, certainly Beauty Counter on the clean beauty side, Angie's Boom Chicka Pop in the healthy snacking space, and brands like Shift Nutrition and Airborne on the vitamin side. So super excited to be a part of this and looking forward to the discussion.
Great, thank you all. Just to start the conversation, I want to kind of back up. Obviously, lots of change happening every hour, every minute of every day in these unprecedented times that we live in. But I want to go back kind of over the last 5 years and talk about what the investment and M&A landscape has looked like, some of the changes and trends that we've seen evolve in the last 5 years to really set a foundation for the rest of the conversation. Shaun, do you mind kind of taking us through at a high level what you've seen in the last 5 years, specific to beauty? I think a lot of our audience is really beauty focused, but then probably more broadly, Blythe and John, I'll get you guys to comment on what we've seen within the consumer lifestyle sectors as well.
Yes, thank you, Brit, certainly. So it's interesting we talk about a 5-year look back. I think that's when the M&A environment for beauty really heated up and really accelerated. Prior to that, there were a handful of pretty marquee deals, including L'Oreal acquiring Urban Decay, Coty acquiring Philosophy, ultimately, and P&G buying things like Frederick Fekkai in the hair care sector. Then you look at sort of around the time of the Knox L'Oreal transaction, and that really was an acceleration in both the velocity of deals and certainly that's, I think, when valuations interestingly started to creep up. And I attribute it to several factors. I think if you think back about distribution, that is really about the time when the combination certainly in North America and globally with Sephora, that's about the time when Sephora and Ulta really tipped the scales with respect to breadth and reach, and acquirers and investors saw that you could have a real company of scale north of 100 million in sales just in Sephora and Ulta, and perhaps with another interesting, compelling leg of distribution such as QVC and then direct to consumer. The important thing is all of those were disrupting legacy distribution in both mass and department store. Obviously, the deterioration of department stores as a preferred channel is well talked about and certainly well covered. But I think the key piece of this was the scale at which companies were able to achieve. So if a private equity firm could identify a business in the 20s and 30s million of revenue, fund that company, help it grow, and that business grew well north of 100 million, you would have a very sizable strategic takeout because that brand became relevant to those strategic buyers. And a number of you probably experienced that, and certainly Blythe and John were a part of that directly. I would say the other key point here is Instagram, and we all know this, Instagram was started in 2011, but it took a few years for us all to realize just how impactful Instagram specifically was in driving beauty sales and certainly the metric around Tribe and EMV. Ahead of that, there was really the YouTube sort of platform where it was very educational, but I would challenge that was really a group of very, very sort of heavy makeup users, beauty aficionados, beauty junkies. And Instagram really brought the beauty aspiration to the masses. And I think that really created a lot of disruption and opportunity for investors and also brands to grow very efficiently. The next point, I think, is certainly somewhat related to the first point. It's really when Sephora and Ulta became dominant players, and investors and strategics really had no choice but to buy deep into the brands that were being successful. It also happened that these brands were highly profitable. They didn't necessarily have the fixed costs of marketing in department stores. They were leveraging social. So these businesses were achieving rapid growth, but also with high margins. And we'd always joke, some of the companies had software-like growth and margins, and therefore, were deserved software-like valuations. And that is in fact what happened as the market matured and the industry continued to gain steam in the M&A world. I would say lastly, success bred success. And as companies grew and were successfully sold to strategics, folks really piled in, and that created what was essentially almost a scarcity value. The demand for these companies outstripped the supply, and certainly the variable that has to give there is valuation. And I'm sure I can kick it over to Blythe and John. They likely have perspective there directly. Is they were very early investors in the sector and then saw sort of a big wave of competition come in alongside of it, and certainly drove up prices.
Yeah, John, I'd love to go to you to follow up on that kind of perspective on exactly what Shaun was talking about, valuations, kind of skyrocketing. I know there's been a lot of conversation around that kind of bubble bursting, and really the opportunity for strategics and investors to identify brands earlier on in their success curve. So I'm interested to hear, is that something that you're seeing and driving at Knox Lane, and what are those early success indicators that you look for?
Yeah, no, look, I'd say Shaun characterized it very well in terms of some of the change that we've seen over the last 5 years. Having spent a lot of time within beauty, and the last 5 years have been insane. And I say that in mostly a good way, but just the barriers kind of coming down with digital having the impact it did on your ability to sell, your ability to reach your consumer, and contract manufacturers being more willing to work with kind of novel and up and coming brands. You combine that with some of the success points that Shaun mentioned, and you just had so much capital flooding into the sector, folks who just historically had never been participants because they wanted a piece of that action. And so I think, probably the most salient piece for us at Knox Lane as we look at the market is certainly that values got a little bit out of whack. I think in some instances that was very well placed. Brands are very unique, well positioned, have good unit economics, good margins, good growth, and good opportunity ahead of them. But I think, like other cycles that we've seen in this category and others over time, there's been some bad behavior as well, where there's been less of a focus on profitability and certain things that were forgiven in that type of environment that perhaps, as we look out forward, we wouldn't expect people to be quite as accommodating. And so, for us, I think some of the basics remain the same in terms of what we look for, great brands that have a strong point of view where we feel like we can come in and be great partners by providing resources and continue to help them kind of accelerate their growth curve and their market opportunity. But I think you'll see investors broadly be a little bit more choiceful as we move through the next 24 months.
And Blythe, are you approaching investment similarly at TSG? And again, more specifically, what indicators are you looking at today to inform your investment strategy?
Yeah, there's, I think we were actually beginning to lose a little of interest in beauty for a while, actually going into this, because it had become so overpriced and no barriers to entry and no discipline and so much knockoff and not a lot of unique. So, and then of course, the more secular trends away from color, and obviously that was feeding into skincare. But there were just some structural changes that were beginning to happen. In addition to, there's cost to everything. So customer acquisition costs going up so high, just all of a sudden kind of seemed like the opportunity had bled out a little bit because everyone had chased it so hard. Along comes COVID-19 and a lot of things start to change, and you start to see headwinds coupled with tailwinds. And of course, you're facing headwinds in a number of ways. Of course, stores being closed is certainly not helping, given how consumers like to participate in this category in a much more tactile way. So that is really challenging dynamic. Certainly, you can see from my face, makeup hasn't been a real priority lately. And I noticed that I did put some foundation on the other day, and my kid to me, who's been looking at me for now 2 months with no makeup, said, "Mom, your face looks all cakey." And I'm thinking, you know what, you're right. And I don't need this stuff. And so I think there's just a lot of attitudes and usage that have changed in and around this, and around, less is more. And why was I doing that? And of course, those who had innovated, to be able to deliver a pipeline of new skincare and treatments that would become relevant during this time have been big winners during this time. Huda, who's one of our partners, was very smart to see that opportunity, has done quite well with her skincare line in these times. So I look at it and I say, wow, okay, so there's, and also a lot of those companies who were not maintaining any discipline and losing money in what I would argue are unacceptable ways, are paying the price because the music stopped. And it's going to be very hard to raise capital on attractive terms, if you can raise it at all. So that's going to really separate the good operators in this environment. I think there are companies like Madison Reed for whom, have had a really interesting value proposition that hasn't ever shown as brightly as it is shining right now. And so I think there are people, for example, that were hesitant to ever try at-home color, who now have been forced out of necessity to experiment with it, and will discover that it is a great way to do it. It's less expensive. It's a lot of things good, and fits also into the psyche of the patterns that we're in right now. So I think there are some for whom the changes that have come from COVID create actual permanent secular advantages if leveraged correctly. People that would not have previously discovered these brands, and they're discovering them on virtually no spend. They're discovering them in the most organic fashion, which is even more exciting. So I think you'll see companies who have offerings that have become relevant, and distribution models, DTC, that have become even increasingly more attractive, not just because of the nature of them, but because of the reduced CAC and the ability to acquire customers without having to spend, because of the natural value proposition that they deliver. So those are the kinds of things that I'm actually pretty excited about in this environment, is that we've shaken loose a lot of those who were benefiting from a rising tide, and the people who had built companies who had built big infrastructures that were unnecessarily bloated are paying the price for that. So I think coming out of this, we'll see some of the most spectacular businesses, in addition to brands, because there are lots of opportunities, if done correctly, to lean in to this moment and really deliver on a brand equity promise. And an example of that is Thrive Cosmetics, which has built their whole business not only around terrific products in a DTC model, but that of true giving. And this is an environment for a brand like that to shine. So I'm actually pretty excited by COVID, and think that this will be an opportunity for some really terrific entrepreneurs to shine.
Mm-hmm. I love that idea of adversity breeding opportunity. John, I'd love to get your thoughts on that as well. Are you, seeing brands kind of take steps forward in this kind of forced pause in the right way, accelerating changes that probably should have been made or were already in the works? I think, leaning into some of the characteristics that Shaun was talking about, I think channel is really interesting right now. Scott Sassa of Milk Makeup earlier in a panel spoke about shifting their strategy from, the number of doors at Sephora to Sephora.com and D2C channels. Olaplex similarly is trying to open every D2C relationship that they possibly can right now. So I'm curious, in your mind and in the conversations you're having with leaders of your brands, what kind of changes are you seeing being born out of these challenging times?
Yeah, it's a great question. I think it's a combination where we're talking to a lot of leaders of companies right now, and some of those who really stand apart, have this combination of, making tough decisions, things like shoring up the balance sheet, right sizing the organization. Scenario planning is so much right now, is just incredibly uncertain. But really combining that with, to your point, an opportunity to really lean into this opportunity and kind of make the most out of the adversity. And so, whether that's, making those organizational changes or accelerating initiatives that have become deprioritized. I remember, at Elf Beauty, after we took the business public, it seemed like we could do no wrong. And then we had the slowdown broadly on the color side that we saw. And it really forced us, I think, to acknowledge that we had gotten a little bit arguably too customer versus consumer focused. And it allowed us to really retrench and lean into that North Star, make the investments that we wanted to make on the digital side, make the changes, marketing, organization, capabilities. And I think, when we got to the other side of it, we came out as a much stronger brand and business as a result. So I think having that combined view, if you will, of minding the ship and making sure you have a defensive stance, but also with an offensive stance, including creating stronger bonds within the organization. As much as we're separated physically right now, I think what we've found, certainly in our own firm, but also in other companies, is that it's allowed people to be far more intentional in terms of some of that interaction. And I think you can come out with a stronger culture as a result.
Shaun, I'd love to turn it back to you. We've talked a little bit about the cycle of hyper growth categories. Color cosmetics was uncontested for years, as we've all spoken to. Then we saw the surgence of skincare, and now hair care is getting a lot of attention. What categories are you looking at today, and what do you think is driving some of those changes? With the lens of COVID on top of that, what creates sustainable change that will, to Blythe's point, really propel those tailwinds into the future?
Yeah, thank you. So, look, I think it's pretty easy to get down on color right now. I think some of the issues that are in color were created by color, and I think too many brands flooded the market with palettes, which is an easy sell. It's an impulse purchase. It seemed for, I would say, a decade that there was an insatiable demand for color palettes or palettes of any sort, whether was a highlighting palette, a color palette, bronzing palette, this palette, that palette. And there's reasons for that, right? It was an easy buy. There was little cost conversion. It was easy to talk about on Instagram. And the consumer just got fatigued, plain and simple, whether it was, the onset of a huge number of mass or masstige marketed palettes that were trying to eat into the prestige business. I will say, I think where color is going to find a resurgence is with conversion and shade match and real technology on helping consumers find their look online. I think some of you may know a business called Il Maquillage. They have a questionnaire and a way of identifying your shade that's 94% accurate, which is actually probably more accurate than you can get even if you walk in a store. Particularly if you see things that it's no testers. I don't know when we're going to see testers again. That was probably a big reason to step into a store. How is the store format going to change to help drive the color business? So I'm not saying that color is going away as an acquisition strategy for buyers and investors, but I do think things have to change, and there needs to be a more continuous move online of your own platform, how you identify and find consumers and help them get into your brand where they can't go into a store all the time and experiment and try on your product, which that has obviously driven the success in skincare. And there's no arguing skincare has tremendous attributes. There's high replenishment, high use, you use it every day. There's no fashion element. And I do think, clean beauty and a more simplified skincare regimen with fewer ingredients. I do think we're going to see sustainable packaging play a big role, and brands that truly market, a comprehensive sustainability to their business. And I'm not just talking about eco packaging, but, really speak to the consumer that way. One thing to think about, the level of waste that we are creating with respect to all of the COVID issues around face masks and protective wear. All that goes into the garbage. And I know we're saving on carbon fuel emissions, but I think there was already a big trend there. And so I would challenge that the industry is really going to have to figure out sustainability and sustainable packaging. And brands that come up with something that really speaks to that consumer, they're going to be successful. And I know a number of folks are making that shift, and there's a whole bunch of folks in the pipeline that are doing that. But that's the direction where investors and strategic buyers are going. I do think the blow it out in Sephora and then sell it to a strategic trade is probably pretty tired. Most of these buyers have they're full up on that part of their portfolio, and they're really going to be, to state the obvious, they're going to be looking to folks that have a true digital community, an ability to resonate authentically with the consumer in a sustainable way. And Sephora is always going to be an important part of the business. They're a juggernaut globally, but not being dependent on Sephora is going to be critical moving forward to generate real buyer interest.
One thing that you touched on, Shaun, that I'd love to talk a little bit more about is kind of the importance of information gathering and relationship building in investing and what it is you do. I think a lot of our audience today, we definitely have some investors at the event, but we also have a lot of brands and a lot of young professionals. And one of the things that I've always been really impressed by across the investment community is how kind of insatiably you guys all consume information and are out there in the world, getting to know these industries and the players in the industry and building the relationships and networks so that you can really add value and be top of mind when people are kind of looking for those trusted advisors and partners. Blythe, I'd love to start with you, but can you give some advice to our audience in terms of how you approach those relationships, how you go about getting the right kind of information, and then how you think that's going to change in a world where you can't go and, shop a store?
Yeah, well, we've been operating in a more bespoke environment than we ever have with respect to distribution, and in some ways even product development. Brands can, there used to be a very standard playbook about the way you'd develop your line, and go into new categories in a very predictable fashion, and to Shaun's point, roll out in a very predictable distribution fashion. And that worked and actually developed some great brands until that didn't work anymore. And so I think what's interesting about today's environment is the opportunity and the challenge that a bespoke environment offers, which is you can do it any way you want, but there's no playbook. So that means that you need to really surround yourself with people who are thinking really critically about your business and helping really reflect on what is the true value proposition at the heart of this brand, which usually starts with a hero product and a founder's vision for more than just an item, but a whole community that they seek to build. So that makes the role of a trusted advisor, I think, even more important, is helping entrepreneurs really architect, something that doesn't have a playbook anymore, which, is a huge opportunity. But of course, like anything, opportunity often shows up in overalls with a hammer. So it's going to take some work. But I think it's imperative to have great advisors around you who are, using their time to read everything they can, have conversations with other investors, with strategic buyers, with investment bankers, to create their own 360-degree view of the world. Because, what works for one company is decidedly wrong for another, even if it's a perfectly proven tactic. It just isn't right for a certain brand at that particular time. And being able to know, for example, if you're a DTC brand and you have an opportunity to partner with a retailer, when is that right for you and when is that wrong for you? And you know, there's so many questions about that. Or if you're a color brand to get into skincare, when skincare is hot and colors out, is that just cute and following, or can you do it successfully? So there's so many questions like that to answer that for a long time, you know, didn't require as much introspection and reflection. And then, you know, ultimately figuring out where you want your brand to land. If you're interested in ultimately a strategic exit, means having a very, very deliberate approach to your product development strategy, your brand strategy, and your distribution strategy.
John, Blythe talked about, you know, bringing in good people, surrounding yourself with good people. How have you done that in your career? And what resources are out there for both founders, entrepreneurs, and investors today to build those same networks?
Yeah, look, I think people are everything in our business, in any business. It really comes back to the talent and the passion of the people that you have around the table. And so I think some of Blythe's comments were very well taken, just in terms of times like these and the amount of sort of underscoring that not only getting the right people on the boat within your own organization and perhaps using this as an opportunity to figure out where you have some of those gaps, but also to think very deeply about, you know, bringing different partners to the table that can be helpful, that can provide a little bit of, you know, for lack of a better word, that zoom out that is just really hard to do when you are in the day-to-day of a business, especially in a sort of crisis context like the one that we're in right now. And so, you know, I think the current climate, to your question on relationship, obviously it's hard, right? I mean, so much of what we do, and certainly how we think at Knox Lane about things, comes back to partnership and relationship. And as great as Zoom is, you know, it is really hard to do that over video. But I think back to the silver lining view of it and how to take the most of it, I think you can be even more discerning as to who you bring on board and how those people can uniquely help you. And I think in so many different contexts, you know, bringing on the right type of partner can be a really powerful thing at a moment like this, or in general, of course.
Shaun, kind of leveraging John's comments about choosing the right partners, curious to get your thoughts on strategic buyers and the value that they bring to the brands that they acquire or invest in. I think we've talked a lot about how specifically within color, but also that kind of pathway to a strategic acquisition is changing. So what do you think that brands are looking for from strategic buyers today?
Yeah, it's a great question. I think most commonly where the brand reached the point of, hey, I'm ready to do something with that strategic, they really were looking, if it was a North American business, they were really looking for international capability. Obviously, there's huge markets outside of our borders, including, you know, China and broader Asia or broader Europe. And they, you know, they didn't necessarily have the expertise or capabilities. It's one thing to work with Sephora and Ulta or run your own DTC business. It's another thing to understand the nuances of how to do cross-border or go directly into China. How do you deal with things like animal testing, or don't you? And just really the hiring the team and the infrastructure internationally. And I don't think that changes. I think also for some brands, infrastructure, digitally, supply chain, logistics, sourcing, all of those things are hugely important. Oftentimes, you've got some very successful brands that have a relatively narrow set of products and portfolio, and that's what drove their success. But really, if they want to broaden their brand reach and their SKU set, they need the capabilities from a strategic partner. What I will tell you, it's interesting, the strategics are not necessarily looking to buy a business, you know, port the brand into their mothership and say, thank you very much, entrepreneur and founder, now ride off into the sunset. These buyers are and I would say increasingly more looking for a business that has a definitive standalone culture, a standalone consumer community, a sustainable way to market to that consumer. And I think Blythe, alluded to this too. You need to build a business that's going to stand the test of time of a strategic buyer. And we found that the highest interest and the most success were businesses that these buyers felt very confident in a company's ability to withstand the acquisition, if you will, withstand that big corporate buyer.
That makes a lot of sense. I think, Blythe, I'd love to turn to you to dig a little bit more into something that John said earlier, which is kind of the difference between the customer and the consumer. I think that there's some nuance there that is really interesting, that is extremely category agnostic. Can you talk to us a little bit about how, through your advisement and role within brands, how do you look at the consumer and how do you connect with consumers?
You mean as a brand?
Yeah.
Yeah. Well, it usually starts with a hero product to start a conversation. And I think the reason that often works pretty well is because there's a certain vulnerability that is appealing in that the entrepreneur clearly had a need in their life that was not being served. And whether that's, Spanx, or you could take so many different examples of that. Some of them kind of make you blush, but the reason that they became, I think, really great brands is they had incredibly authentic beginnings with a founder who was a bit vulnerable and admitting that they had a weak spot in their life. And certainly, IT Cosmetics really harnessed the power of vulnerable and identifying the issues that the founder was experiencing and then delivering incredible solutions, and the solidarity of the community that helps build each other up together in conjunction with great products. So my experience is that the best way to speak to a consumer and get their not only attention, but their long-term commitment is to really live in that space. And product development walks a fine line between product for product's sake, just for growth's sake, and product that really has purpose and meaning. And I think the best brands are created when the teams really focus on that important differentiation, which is, if you just said, well, let's get into skincare because we were color, but it's not hot anymore, we got to go chase skincare. That's not necessarily a formula for success. What is a formula for success is, of course, developing a very distinctive product that has true purpose and hasn't really existed in quite the same way before. So those are the ways that I've observed the most effective ways to get, not only attention, but to bring people into your brand long term. In order to keep them, you, I think, have to offer more than just a product. You have to invite them into a community that shares, values and has a voice that folks can identify with, and that continues to evolve.
I think that it's really interesting. Each of you have mentioned the importance of authenticity, and then also from a product development standpoint, the importance of really strong hero products. That is definitely something that is supported and echoed in our data. I think this idea of newness has been incredibly important, but I think perceived as more important than it is. Newness to drive the conversation on social, newness to drive, incremental sales. But when we look at our data in terms of the social conversation and amongst brands, influencer communities, hero products really drive the majority of the conversation as they drive the majority of the sales on the brand side. So I'd love to explore this idea of newness and the role of newness post-COVID. John, do you want to lead us off here?
Oh boy, yeah, no, it's a great topic and familiar for us. I think at Elf Beauty in particular, one of the things that we really liked about the company and what the founders had built was this idea that it was a hero brand versus a hero product, and so much of beauty in particular really does get built on the back of this sort of hero product concept. And Elf, just by virtue of how they grew up, kind of took a very different approach where it was less about any single thing. They had things that they were known for, but more about this opportunity to kind of deliver against a brand promise of accessibility and, innovation. I would say throughout the course of our journey at Elf, I would say the demand for newness became greater than we had ever seen. And I think some of it lends to Shaun's commentary about what was happening in the broader climate and just how much new activity there was. And so we ended up really ramping up the number of new product introductions in any given year. And I think, as we sort of step back, it was this balance between being fresh in front of the consumer and having new opportunities to create that delight for the consumer, while at the same time making sure that you were more focused in your efforts and had more of a relevant way to break through. But I think more than anything now, it's less about product newness and more about brand relevance and how you can actually do different things that in the mind of the consumer, you stay very current. And there are a million different ways to go about doing it, but I think product is just one dimension of that.
So it looks like we are coming up at the end of our time. We have about 4 minutes left. So I want to ask you all a deceivingly not so quick question, which is, are you currently exploring investments, new investment opportunities, and within which categories, if that's something you can divulge? Shaun, would be really curious from you if your phone's ringing and or if you're making calls on behalf of. Obviously, we know details can't be shared at full extent, but just curious to kind of get a feel for how things are going in the current landscape with active conversations around new investments.
Yeah, I mean,
yeah, Shaun,
go ahead. You want me to go first, or who wants to go first?
Sure, Shaun.
We are active. We remain active. I think all of some of these elements we talked about have come together for certain situations. And, the good news is buyers are still buying and companies are still growing despite COVID. And as you might imagine, it's companies that have a unique digital footprint, true omni-channel presence. They have levers to pull on their business outside of, someone walking in Sephora and Ulta. It is going to be technology driven, the next steps, and I can tell you that's where folks are interested. COVID really has just accelerated many aspects, and this is certainly written about, right? I think department stores and big shopping malls are going to continue to deteriorate. The productivity of Sephora is probably going to decline on a per store basis, but their online business is likely going to make up for much of that. So how do you live in that world, much to what Scott said on what they're grappling with at Milk? And Amazon, right? Amazon is, we're all going to have to sort of live on Amazon. It doesn't matter if you're a prestige beauty business, what is that going to look like? And so the businesses that we're working with are kind of checking all those boxes. So the good news is there's folks that are succeeding, and we've got things on the horizon that are pretty interesting. And so I feel optimistic.
Blythe, you want to take it from there?
Yeah, as mentioned earlier, things just got interesting. And I didn't think they had been for a while, honestly. So I'm doing a lot of thinking, and what I'm looking for right now are brands that are getting a unique tailwind that I would tell you is very unique, in that it's free in the form of demand for a certain type of products and a certain type of distribution model. And those who can then be revealed to have a value proposition that was previously overlooked or not fully embraced the way it will be going forward, and create a permanent secular advantage on a set of economics that are attractive. Meaning you didn't have to buy all these customers. They came into your brand naturally and authentically and organically. And then the management team founder is able to really really lean into the brand of who they are, who they want to be, and create a permanent relationship with these consumers. So those are the sort of stories that appeal to me at the moment and going forward. I think those that have a heavy reliance on brick and mortar, whether it's Sephora or Macy's or any of this, is obviously a very difficult place for an investor to play right now, because it's clear that at some point those doors will, of course, many of them reopen, maybe not department stores, but Sephora certainly. But how does that shopping experience change? And so your ability to prognosticate about how they'll perform there is a very murky equation, and it was not for a while. So I think you could get in a whole lot of trouble right now if you're not really thinking about the future and how it plays out.
Shaun, what about you? Are you investing today?
Yeah, look, we're having a number of conversations and very active. I think there's a lot of complexity right now, to state the obvious. Some of the earlier logistical comments about how you build relationship and partnership, through situations like this versus being able to get together in person. But look, I think for us at Knox Lane, we've never been the purely up and to the right type investors. So a little bit of hair or complexity doesn't bother us. And we're very long-term in orientation. And so I do think that there are some dynamics between buyers and sellers coming together, and the level of risk that went up commensurately relative to what the world looked like 3 months ago. And bridging that gap takes some level of creativity. But we're having some of those conversations now, and excited to look for next partners.
Well, it's great to hear such an optimistic take from each of you. Thank you so much for the last 45 minutes. Really appreciate your insight and perspective. I know our audience really appreciates that as well. And thanks again for participating.
Thanks. Really appreciate you including us.
Thank you all.
Thank you.